I'm going to discuss agreement of sale of a business as a growing concern, otherwise called a sale of business agreement, or a deed of sale agreement. And this is a common question in the board exams. And so I thought, let me discuss a common question in the board exam, which is an agreement of sale and which has various components of an agreement. And so what I'll do is that I'll look at a few common causes, and then I'll discuss three clauses which I think are very important to learn off by heart, and but importantly to have a clear understanding about because of the consequences that come with um, uh, with the sale of business agreement and what a sale of business actually means. And so, even though when you are faced with a client who would advise you whether they sell their business or to franchise the business, in a board exam question, the question would be draft a sale of business agreement for a business as a going concern for this specific. Okay, for 30 marks, what you'd include in a sale of business agreement, the common clauses that you may find. Obviously, depending on your experience, you might add different clauses that we don't know about, but it's all up to you what you want to add. So initially, the most important is always greetings to agreement is the various parties involved. In this case, it'd be a buyer, a purchaser, a buyer or purchaser, or a seller. And so these are the two parties, and the details of the descriptions of the parties. You'd provide ID or FICA information specifically relating to that transaction, and it must be parties who have contractual capacity. So you describe that how they have contractual capacity, and how are they properly authorized, specifically if it's a business buying another business or a business buying a business, and or a company buying it really does get complex. So depending on the parties and what description is provided for you on the paper, use that to describe the party. Then there'll be definitions. Definitions may include such things as signature date, effective date, what the business is, where the business is, the premises of the business, what is termed fixed assets, what you would consider stock in terms of the business, if there's any business. So an example of a restaurant, which is a common example used for board exams, your description include foodstuffs, wine, and malt liquor, soft drinks, empties, and containers. So those are the descriptions of what stock would mean. So describing that. And then you'd move on to describe the subject matter of the sale. So in this case, the subject matter would be a business located, a restaurant located, what would it be? It would be selling of a business as a growing concern, compromising of the following assets: the goodwill of the business, the fixed assets, all stock on the premises as close of business on the day before the effective date. The following, which are excluded from the sale of agreement, to be cash on hand, monies deposited to the creditor of the business, checks, promissory notes, securities in possession of the seller, book debts of the business. So, in clearer terms, it's all the things that would belong to the seller that would not part of the sale of agreement. And it's good to note what the subject matter of the sale of a business is, because in a sale of shares, what is the subject matter? Shares. What shares? Describing the shares. So what is the subject? So it would be the essentialer of the sale of the business. So what makes this a sale of business agreement? There is a sale of a business as a going concern. Okay. And then there will be a clause describing the purchase price payment and the payment of the purchase price. So the clause would describe how the obligations will be paid by the buyer, describe how much is the purchase price, will describe how it will be paid, and how it was determined, and when it must be paid. So that's the purchase price. How, when, by whom, how much. And then VAT implications or with regards to sale of business agreement, because often in a board exam context, the two it's two it's one business buying another business, and so often if it's a sale of a business as a growing concern, those businesses are both VAT vendors, and so you will consider the fact that these are VAT vendors, and if they're both VAT vendors, and that they warrant that they're both VAT vendors, you can place that on the agreement as they warrant that they are, and if not, the buyer will pay VAT as well. So if it's not zero rated, the buyer will pay VAT as well. So VAT implications, and then that for that sense will change the purchase price, of course. And so just to put a provision of that to protect the idea of VAT vendor. So I will discuss the VAT clause in more detail. I'll read out a VAT clause, and then substantive conditions of the sale. So what is conditional upon the on the purchaser, on the seller. So what could be conditional on the purchaser is obtaining of security. What be conditional on the seller is obtaining licenses, obtaining that fully complied with licenses. So it all depends on how descriptive your substantive condition is on and what you consider is important. So like getting a business license in terms, getting a liquor license in terms of a restaurant, would that be a substantive condition? Just be aware that is an important clause depending on the facts given to you on the board exam paper. So determination of a cost or price of stock. So in determining the cost of stock, often it says the seller and buyer jointly take stock of the close of date on the date of the signature being effective date as stated in the agreement. The parties agree that any stock which is marketable, damaged, or not marketable, damaged, or unusable for any reason must be excluded from the sale of business unless parties agree otherwise. And with how the seller invoice and statements of account in respect of the stock will constitute prima facie proof of the cost price. And if the seller is unable to provide satisfactory proof of the cost price, it will be determined by use of the supplier, and that if any dispute on stock seller dispute on the stock, the seller retains ownership. So yeah, and that the signed schedule of stock is final and binding to also once stock has been determined on when its stock has been determined, that is the price. Then the assets and liabilities describe that subject to the effective date, the seller will remain responsible for all things relating to the business incurred prior effective date, and indemnifies the buyer from liability, liability for any costs incurred prior the effective date. So just describing that, and then the fact that the assets will pass to the buyer on effective date, and from that date the purchaser will be liable for any expense related to the business and entitled to any income occurring from it. So just a description of how parties will handle assets and liabilities from effective date. The delivery describes how the transfer of business will take place, when ownership and control takes place, and what the seller warrants will happen with regards to when delivery occurs. So the duties of the seller regarding the title of the seller, validity of licenses, liability of existing debts to be paid, and discussing all the things that were placed in the schedule that was binding for the stock being transferred directly to the purchaser buyer, used in one word. So just be aware that when you are in the exam, if you write purchaser, you must continue using the word purchaser, or if you write buyer, continue using the word buyer, because consistency is key when drafting in board exams. Okay. Adjustments accounts speaks for itself. And then effective date. The effective date is about duration. So it will come in the fact that when the commencement date on which the seller becomes the owner and the purchaser no longer has control over the business, and the date of termination of the seller's rights, and how will this relationship end? So that will be the effective date, and describing when that occurs, and how liabilities and assets are dealt with from the effective date. So that's important. And then, as I described, warranties could relate to the fact that sellers relating to delivery, validity of existing licenses, authenticity and correctness, describing authenticity or correctness of audited or unaudited financial statements, and then that the seller refrains from any conduct which may materially prejudice the goodwill of the business and access to buyers to the business, and also warranting the fact that the seller will provide perusal to customer information and assets, and will reserve ownership. The seller will reserve ownership until full payment received. Yeah. So, but in terms that in doing so, the seller warrants that he will not get any remuneration for that, for the warranties. The remuneration will come in the form of the purchase price, and that is it. Okay. And then Voetstoots. Voetstoots is a common term. It is found in most businesses, sale of business agreements, or even in most agreements between two parties selling immovable or movable property. And so it's very important to know that common clause, Voetstoots, which relates to that fixed assets are sold, Voetstoots, and the seller is not liable for any defects in the assets, latent or otherwise. So this one, just know, it came up in the previous board exam, and I'm sure it will come up again. Then a clause, an employee and pension fund. So depending on the scope of what's given to you in the board exam, you would be able to describe that sale of business agreement clause. Okay, then publication in terms of section 34 of the Insolvency Act. I'll discuss that in detail after the slide. And then restraint of trade and protection of goodwill. So restraint of trade being protection of goodwill after the sale, and providing access to the business by the seller to the buyer, and ability to peruse customer information, and that no remuneration is given to the buyer for doing this, and that's a part of the goodwill of the business. Goodwill of the business. And then lastly is clauses in which are very essential to law students: breach, jurisdiction, domicile, entire or whole agreement, the extent of the agreement, between the two parties, severability, non-variation, ADR, arbitration and dispute resolution clause, waiver, what parties waive, agent commission, which describes a sale or a sale of immovable property, and is a common clause, and costs. I'll describe these at the end. I'll read them out, but these from 17 to 26 are common clauses, and if you don't know them, you need to become more aware of them, because they're not just important for law school or practice, but they are important for life, and they walk with you throughout most contracts, not every single contract, but most contracts. Breach, jurisdiction, domicile, whole agreement, severability, variation or non-variation clause, ADR clause, waiver, agent commission cost. So just place them in your mind for memory. The first clause I want to read is the value added tax clause in terms of the sale of business agreement. So this clause reads as: both parties are registered as VAT vendors, value-added tax vendors, under the VAT Act. The business is also sold as a going concern and shall continue to generate income after ownership has transferred. So this business is a productive activity and will continue to be a income producing activity until even after the business is transferred. And importantly, that all assets required to conduct the business are included in the sale. And then that once again that this business is capable of earning income separate from all other businesses. The purchaser and seller agree that should this transaction not be zero-rated for any reason, the buyer will pay the VAT and reclaim the input VAT from SARS. And so just to add to that, the value added VAT clause is very important for sale of business agreement because both parties say that they are registered VAT vendors under the VAT Act. And should they be not the case, the transaction is not zero rated, and that will mean the purchase price will be more, and so the buyer must pay the VAT and reclaim input VAT as required. Okay. The second clause that I think is important is protection of goodwill and assistance to the buyer, otherwise known as restraint of trade clause. So it reads, the seller may not for a period of how many years you want, commencing on the effective date, carry on or be interested directly or indirectly in the business of a restaurant in the magisterial district of Randburg, for example. The seller acknowledges that the restraint is reasonable as a subject matter, duration, and geographical area. The seller must, during the period preceding the effective date, instruct the buyer on his business and methods and running of the business generally. Give the buyer complete access to every facet of the business and in particular to any records relating to the customers and all recipes of using the business. The seller will not be entitled to any remuneration for assistance given to the buyer in terms of this agreement. The third clause I think is important to remember for purposes of board exam is the publication of the section 34 of the in terms of the Insolvency Act section. So it reads, the seller shall publish forward notices of intended transfer of business as required by section 34 of the Insolvency Act. The buyer shall pay any cost incidental to this publication. And lastly but not least, in terms of a sale of business agreement, it becomes really important to look at the fact that there are common terms that, as I mentioned earlier, may be asked in the board exam. However, because they are so common, they are asked in life and it is assumed you know them. So include in your knowledge of sale of business agreement a breach, jurisdiction, domicile, whole agreement, variation clause, ADR clause, severability, and footsteps. Know that these may come up in a sale of business agreement for board exams. However, in life, it's very important to constantly be aware of these clauses. Anyway, that was a brief outline of a sale of business agreement in terms of for the board exams. And so I wish you all the best if sale of business agreement comes up in the board exam, that you are able to answer it with confidence, but with the knowledge that a lot of the questions and the answers that you require are actually within the board exam. So good luck with your exam.